Hi, my name is Christian Stearns. I'm a certified financial planner with Conte Wealth Advisors. Today, we're going to talk about the basics of sustainable investing and values-based investing. But before we get to the what, I want to briefly talk about the why. Why sustainable investing? Not only can you feel good about your impact on our future by supporting sustainability, but there are proven links between sustainability and financial performance. Remember, when you invest, you're buying into a business. You are supporting not only the products and services that businesses produces, but also how that business is operated. Do you know who you are in business with? Do their values match yours? Let's take the tobacco industry as an example. When it was scientifically proven that tobacco posed a significant health risk, and the tobacco industry knew this without taking action, record-breaking lawsuits were filed, and the industry is still paying for it today. The value of the industry plummeted, and those companies' stock prices suffered. On the other hand, let's look at the EV or electronic vehicle industry today. Do you think that we will ever return to the combustion engine in our automobiles? The EV industry and the companies that support it have seen dramatic increases in their value. So bottom line, will investing in sustainability affect profits? In one meta-analysis by Morningstar, 88% of the studies found that companies that adhered to social or environmental standards showed better operational performance, and 80% of those studies showed a positive effect on stock price performance. According to Morningstar, estimated flows into the sustainable funds have had a growth rate of more than 150%. Would you like to be a part of this growth? So, what is it? Sustainability, for those of you who are unfamiliar, broadly focuses on meeting the needs of the present without compromising the ability of future generations to meet their needs. The concept of sustainability is composed of three pillars: economic, environmental, and social, also known informally as profits, planet, and people. Transferring this concept to the investing world, sustainable investing is a broad term I like to use for investment approaches that consider socially responsible investing, SRI, environmental, social, and governance factors, ESG factors, and their impact. The category includes strategies that fall all along a spectrum of investment strategies. As with any new paradigm, it is defined by the language we use. So in order to understand, we must have a common language. In my mind, sustainable investing encompasses three main categories of values-based investing. One, socially responsible investing, or SRI. As I like to say, what you do and do not want to own. Social responsible investing is the practice of investing in money in companies and funds that have positive social impacts, or divesting in those with negative impacts. While some people may consider this political investing, it is simply matching your values with your investments, providing financial support to those investments that enforce your values, and taking away support for those that do not. An example may not be including any companies in your portfolio that produce products that have negative health impacts, while including companies that have positive environmental impacts. Simply put, this is intentionally investing in what you do or do not want to own in your portfolio. The second, environmental, social, and governance, ESG investing, or what you should own. ESG investing is a growing category of investment choices that blend environmental, social, and governance factors into traditional investment evaluations. The environmental component requires research into a variety of elements that illustrate a company's impact on the planet, in both positive and negative ways. The social component consists of people-related elements like company culture and issues that impact employees, customers, consumers, and suppliers, both within the company and in the community. The corporate governance component relates to the board of directors' composition and oversight, as well as shareholder versus management attitude. There are a variety of methods to evaluate an investment on these criteria. A growing number of independent providers have developed ESG scores for companies. This type of investing requires some research into what you should own in your portfolio. Third, impact investing, or what I say, what you wished you owned. Impact investing is investing made into companies, organizations, and funds with the intent to generate a measurable, beneficial social or environmental impact alongside a financial return. You can have a positive impact simply by your investment choices. Buying a local bond instead of a generic bond can provide support for a community project. Investing in companies that are developing better products or services for the future, such as alternative energy, can support positive impacts. Supporting companies that promote social justice can have a deep impact. Sometimes these investments provide not only good social or environmental outcomes, but they can also be financially rewarding. Many times, they are the investments you wished you owned. There are other terms being used in sustainable investing and a variety of methods used to obtain results. It is important for you to know the basics and to be able to question what is in your portfolio and why. As sustainable investing continues to grow, some funds have merely rebranded themselves using sustainable terms without it changing their underlying investment strategy. Greenwashing is a real threat and something research and your financial advisor can help you avoid. Hopefully this has motivated you to get started. Without action, nothing will get done. So how do you get started? First, start off by educating yourself. Knowledge is power. Be sure to browse all the content on my website, www.investingthatmatters.info. Talk to your financial advisor and ask questions. If you don't have a financial advisor, please give me a call or contact me through my website. I would be glad to answer any questions you may have. Have an analysis done of your portfolio and know what you own and why. I can also provide a complimentary portfolio analysis. Disclaimer: please note that investing involves risk. Depending on the types of investments, there may be varying degrees of risk. Investors should be prepared to bear loss, including total loss of principal. With that being said, please get started. Take action. Sustainable investing matters not only to you, but to our future.